Hello everyone, greetings from Mere Asset Mutual Fund. India has been considered to be one of the fastest growing major economy in the world. Now, one of the important levers to India's growth story is consumption. Why? Well, why I say so? There are multiple structural factors that are expected to drive the consumption growth story in India, like demographic dividend, per capita GDP, which is at an inflection point currently, urbanization, premiumization, etc. While consumption within is also expected to have a conducive environment, particularly from a moderating inflation, and in order to understand how this space is evolving, why it is looking interesting at the current juncture, and why one may look at this space, we have with us Mr. Siddhant Chhabria. He has been managing Mere Asset Great Consumer Fund along with Mr. Ankit Jain. Mr. Siddhant has an overall experience of more than 7 years as an equity research analyst and credit rating analyst. He has been previously associated with SDFC Securities and CRISIL Limited. So welcome Siddhant. First and foremost, want to understand from you what is your outlook on consumption as a theme from a medium to long term perspective.
Yeah, hi, thanks for having me. So if you see, consumption is one of the most attractive investment opportunities in India. It is a secular story, and long-term drivers of the theme are, if you see, firstly, India's demographic dividend is pretty solid. The median age population is 28 years old. More than 2/3 of population is below 35 years of age. Working age population is growing, and it will continue to grow for the next 2 decades, while this is expected to or started to decline globally. Households, if you see middle class households, about 20% currently is expected to double over the next decade. So these are the broad sort of drivers from a long-term standpoint, and even urbanization today is at 35% in India. Globally, this is more than 50%. So there is scope for that as well too. So these factors will continue to drive growth in consumption over the medium to long term.
Siddhant, while you explained about why consumption as a theme is expected to do well, particularly the per capita GDP, which is at an inflection point, and there are other factors like rising income levels which will drive this space. My next question to you is basically, since you are managing Mere Asset Great Consumer Fund, how is the fund currently positioned within different segments of the consumption space? So if you can throw some light there.
Sure. So if you see, current portfolio is well diversified between consumer staples, consumer discretionary, about 25 to 35% weightage. In discretionary, we do include retail, durables, and even building materials. Now we are bullish on consumer discretionary, we are bullish on building materials, and even new age as a theme. Within discretionary, the thought process is that with India recently surpassing $2,500 of per capita income, there has been an inflection point for all of these companies where growth is starting to accelerate as basic requirements have already been met. So there are some opportunities which have come up. With respect to building materials, we are positive given the real estate tailwinds, and we believe this is one of the good proxies to play the real estate theme. New age, most of these companies post-listing have pivoted towards profitability, and they are displaying that path to profitability, and the growth runway long-term opportunity is pretty attractive. So from that point of view, while at the same time we are underweight FMCG, the thought process there is most of these companies today are trading at very rich valuations in context to the growth profile that they offer. These companies can grow at 1x GDP, while most of the other sectors that we spoke about is growing at 1.5x plus. Apart from these, we are also invested in other sectors, be it financials, autos, telecom, hospital. So that is the broad construct of the portfolio.
Thanks, Siddhant. In terms of stock selection, do you have any bias towards market cap allocation, or it is purely a bottom up story?
Yeah, so the fund has flexibility to invest across market cap or style with respect to our investments. So we're not constrained to any of these style. The fund is managed from a fundamental basis, from a bottoms up approach, where we look to identify growth companies which have good return on equity profile and possess sustainable competitive advantages run by capable managements. If you see, this fund is concentrated across 30 to 40 stocks, so that is the sort of construction.
So Siddhant, how's the consumption patterns evolving, particularly in India, over the last few years, and how do you see it going forward? If you can shed some light there.
Sure. So if you look at post-COVID, what we've seen is one clear trend of K-shaped pattern of demand recovery, wherein upper middle class segment or the premium segment has been growing very strong, very handsomely, while at the same time lower middle class has been grappling with inflationary scenario, and hence consumption has been weak even till date. If you look at the gap pre-pandemic consumption part today versus GDP, there has been about a 15% shortfall in consumption, and that has hit the lower middle class significantly. So the view here is that as inflationary headwinds are moderating, our monsoon outlook is also positive for this year. We do expect with a broad-based economic recovery, we do expect the mass consumption to start to recover at some point going forward, and hence one can expect a broad-based consumption recovery post-COVID after good 3-4 years.
Sure. Well, thank you so much, Siddhant, for those interesting insights into the consumption space as well as on your fund. Hope our viewers would have liked it. Thank you very much.
Thank you for having me.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.